Hello friends. So today we are going to talk about one IT major company whose result is out, and we are going to understand how this result was, and that is a big major IT company, that is TCS. And yes, this query has been asked that how was the result and what do you think about this? The question is asked by Sudhir Basu, Rahul, Santaram Shinde, Akash Swami, and Mandar Joyce. So guys, today we'll talk about how was the result, and as an investor, what should you do? You should buy, sell, or hold TCS. I'll give you a complete review of this stock end to end. So stay till then. And hello and welcome everyone to my YouTube channel. And guys, in this channel, we are taking every one of your questions. So if you have any question related to any stock, put it in the chat. We will try to cover that. So let us understand about TCS company in detail. How was the results? So talking about that company, the TCS actually is not performed in last few years. And what was the some of the main reason was, of course, the slowdown in the economy in everywhere. You can say in US, Europe, and of course after the you can say that COVID crisis. No, suddenly things were not going around well for the IT majors because the Europe slowdown happened and USA also happened at that time. So if you see the 5 year chart also, no, if you see from 2021. I think you can say October 2021, the stock has not so performed well. At that time also, it reached to almost, you can say 3,900. And currently it is also around hovering around 3,900. So you can say from last 2.5 years, the stock has not moved as such. Yes, it reached its top recently only, almost in March. But after that, again, it has fallen. Now, we'll understand now how was the result first. Then we'll talk about the valuation as an investor, what you have to do with this company. So talking about the result was okay. So when we talk about the result, if you see the outlook and everything, so talking about that, the deal momentum which has happened remains solid during the year. There were no change in tenure of deals. 55 to 60% of deal were cost optimization, while rest were transformation deal. So basically, lot many you can say cost optimization deal is happening. Again, big deals are not coming so fast, and that is the problem with the company. Of course, some total deal size is increasing slowly and gradually, but not at that level which everyone is used to it. Again, discretionary spending remains under pressure, so most of the clients know they are not spending more. Okay, they have that inflation fear across the world. Inflation is on a high side. Yesterday US data came, which also shows that no, inflation is on a higher side. Again, transformation project will be funded, saving cost optimization initiatives. So basically, everyone is still waiting how the things will pan out from here and whether the interest rate cut is happening or not. After that, only they'll no accelerate the deal part. Again, consumer vertical is seeing some green shoot. Manufacturing remain robust. The pent-up demand in BFSI will drive the growth over the time. So you know that most of our finance IT companies are depending on BFSI. Okay, that is the thing, but no, banking and financial services. And this is where no the growth comes normally. And TCS is also too much depending on that only. Also, when we talk about the clients are leveraging AI much more in the application development, maintenance, deployment. So if you talk about the TCS, even I know that no, TCS is also making their employees work on AI much more at a deeper level, and they are trying to bring AI in most of the functions of their, so that no, in future when the AI is there in full force, maybe after a few years, TCS is able to no go with the path and they are able to implement. See, all these are big companies. Whether you talk about TCS, Infosys, HCL, and all that, they know a big animal AI is coming and they have to adapt that. So they are also trying to adapt at each and every function of the company. Again, salary hike announced for financial 25 similar to last year, not a big hike. Of course, some of the employees who are performing well, they are getting a double-digit wages hike. Given its size, order book exposure, long duration, profit TCS well positioned with the weakening macro environment and right the anticipate industry growth. So because their position is so strong and they are well established, no, there'll be not a problem that they will face any issue, big threat of AI and everything. They are trying to adapt with the situation, and also no, the contract part will also come in future as and when the interest rate goes down. Again, if you talk about the leadership of best in class, the company is able to maintain industry leading margin, demonstrate superior return ratio. So they are able to they are the leader of the pack and they know how to do the business. And at a service oriented business, or TCS is doing very well. So that's why they have a industry leading margins and superior returns ratios, and that is good for the company. Again, growth was driven by UK and India, and North America was a drag. So UK and India has done a very good no growth over the time. Again, the main sector was manufacturing, and BFSI, communication and tech remain under stress. Okay, so these are the BFSI is the major where they are having a very good growth. Again, TCS reported its highest ever, you can say, total commercial value, means basically total deal value of around USD 13.2 billion, which is up 63% quarter on quarter and 32% year on year. So slowly and gradually they are moving up. Their peak was around 11.2 billion in quarter two. Okay, book to bill ratio stood around 1.8x. Again, they have a higher operating margin performance. EBITDA margin 100 BPP, quarter on quarter 26%. The lower and medium term guidance band for the first time in 12 years. Okay, 12 quarters. So their EBITDA margin is around 26%, which is quite good. And that is the positive. Again, growth was driven by UK and India, and North America was a drag, that I already told you. So these are some of the important points you have to keep in mind. But when we talk about the result overall, if you see quarterly result, correct. So this is the quarterly result. Okay. And you see here, there was a steady growth. So last few quarters, it was around 59,000 and this one is around 61,000. Okay. Little bit of jump in the profitability, but this is how the normally you can say that TCS work slow and slow, it's a slow board. ऐसा नहीं कि भाई रातों रात भागेंगे. और if you see the current quarter also, March quarter, the maximum growth is coming from communication, media technology, manufacturing 11% and others 10%. You can see BFSI is 1%, but actually it will grow much more faster in future. So when we talk about the margins, the maximum margin they are deriving in manufacturing and you can say the life science and healthcare. BFSI is giving around 28% margin. Okay. Now, when we talk about the year-to-year comparison, also, no, this is a steady growth which is there in TCS over the time. When we compare with the peers comparison, you can say when we TCS is having the highest, you can say efficiency ratios like ROE 51%, ROC is 64%, which is best in class. Very few company at this level is able to maintain this type of ROE, ROC. Again, ROE is 32%. Now, if you talk about its competitors, which is around ROE is 31%, ROC 40. Okay, HCL is around 23 and ROC 28. So overall, if you see the sales growth and all growth, okay, now this is where the always the concern comes, because see, if you see the sales growth is around 6.85%, profit growth in last 3 years is around 11.86, and sales growth in 3 years is 13.63. This is where our concern lies. If you see here last 5 year 10 year data also, okay, अगर आप यहाँ देखोगे, so just a minute, I'll just show it to you. So if you see compounded sales growth is around 11%, 10 years, 5 years 10%, 3 years 14%. Even last 3 years compounding profit growth is 12%, and stock price CAGR is 7%. Now this is where the concern lies. Agar if in last 10 years and 3 years also they are able to move like 14%, 12%, then it will not give you a great return. Honestly speaking, no doubt this ROE and all that is much more on a higher side. So if we talk about that, okay, sales growth will be there at maybe 10% in next year, 2 years. Again, the EPS growth is 15%, but it will not move your needle. This is where the you have to understand at what level you should enter and whether it will give you an exceptional return or not. I think if I see the TCS P ratio is one of the highest, 30%, 30 times against its peers like Infosys, HCL, and Wipro. So taking into all this consideration, now I always feel this company is doing very well. Efficiencies, their ratios are good, everything. But the problem is the valuation part, because if you see the valuation is always on a higher side. Okay, and P ratio is on a high side, and again it is already no, commanding lot of premium compared to other IT companies. So as an investor, you should be aware of it that if you are getting into TCS, okay, one thing is for sure, it's like a elephant, a big elephant. It will move slow. It is not going to run. Again, another important point which I forgot to tell you, that it is providing you 66% of dividend payout. Okay, so 66% वो आपको वापस dividend दे रहे हैं. Again, they are bringing lot many bonus in between and all that. Now, when this type of thing happens, so that means they are not getting that, you can say no, avenues where they want to invest more. Okay, and where they feel that okay उनका growth ज़्यादा अच्छा होगा compared to earlier. Okay, that's why no, they are not reinvesting and they are giving as a dividend. When you have such a high dividend ratio, no, you have to understand why the company is not getting some growth prospect. No, because a good, I'm not saying it is a bad company, but a company which is a growing company, no, normally it reinvests their profitability again in the business. If they feel that yes, the ROE of the invest, because see, if their ROE, understand one thing, is on a, such a high level. No, if you see their ROE, how much is the ROE? As I told you, is around 51%. Okay. अब उनको अपनी कंपनी में ही 51% ROE मिल रहा है. And if they will invest in other company only when they feel that ROE is going to expand. If ROE is going to contract, they will not invest. And that is what TCS think, and that is why they are not getting that type of growth opportunity outside, and that's why they are giving as a dividend. So as an investor, it will give you a good dividend. It will give you a decent amount of return over there. I'm not saying this company is bad, but it's a big elephant. You have to keep this in mind. So guys, if you have stayed invested, please keep this caveat which I've told you now only. Think like you are investing for a good 13-15% return with dividend, whatever you are getting, then it's okay for you. So guys, this is again my view. You should not follow it. You should do your own research before investing. I'm a SEBI registered research analyst, but guys, do your own research before investing. And again, guys, if you're still not shared and like this video, do share it and do like it and do subscribe to our channel. And if you want any stock to be analyzed from our side, we'll try to take it. Lot many stocks we are going to analyze as and when the quarterly results are out. So stay with me, guys, and stay with this channel because lot of value you are going to get. So thank you very much, guys. I'll be seeing you in the next video. Hope you like this video. See you then.